The value of assets recorded in accounting records should reflect the future economic benefits that are expected to be derived from either using that asset or from its sale. For example, Thirsty Limited has a machine that produces plastic bottles and fills these bottles with fresh water. The machine has a carrying amount of $90,000 and produces 9 million bottles a year. The $90,000 reflects the economic benefits that are expected to be derived from using the machine. That is, the benefits of using the machine to produce inventory that will result in economic benefits when sold. However, if the economic benefits that are expected to be generated from that asset is suddenly reduced, the asset would need to be impaired. It is important at this point to understand what recoverable amount is. Recoverable amount is the amount that we can get from either using the asset or selling the asset. So an impairment would be required when the recoverable amount is less than the carrying amount. If the machine started overheating and the engineer advised that the machine will only be able to produce 7 million bottles per year, the recoverable amount of the machine would need to be reduced. That is, the economic benefit that can be derived from using the machine will now only be $70,000. Previously, $90,000 carrying amount resulted in 9 million bottles per year. This means that the economic benefit from one bottle is 1 cent. If the number of bottles is now 7 million, then the recoverable amount is $70,000, which is 7 million times 1 cent. IAS 36 requires the asset to be carried at the lower of the carrying amount and the recoverable amount of the asset. In this case, the machine's recoverable amount is lower than the carrying amount, and so the carrying amount needs to be adjusted. The journal to recognize this adjustment would be debit impairment loss in profit and loss and credit the machine cost with $20,000. To recap, an asset's value must reflect the economic benefits that it is expected to generate. If the recoverable amount is less than the carrying amount, then the asset needs to be impaired.